Welcome to PeezyFX Trading. This is the weekly watch list of October 10th, 2021. All right, so as usual, we're gonna start out on the daily time frame and start with the DXY. I want to give these people a little time, see if we're gonna get any. See if we're gonna get any participants today. All right, so like on this monthly time frame right here, I really like how we are approaching the equilibrium of this price swing, the 50% level, just from the main volume, the bodies of the candles. But if we were to, let's just disregard that wick right there and measure this. So it could be a possibility that we trade up here to take out this high, all right? And I strongly believe that we're going to continue this uptrend to take out previous month's high right there. I think that's going to be our next target. I think this is yeah, I think this is our next target right here. This previous month's high on the DXY. So drop down to a weekly. And all right, so we're starting out this new weekly candle. And as you can see, we got relative equal highs up here. All right, so this is last month's high. And then we got previous week's high up there as well. All right, so I like this for a target, this swing high. All right, so get down on a daily time frame. All right, so being that we got FOMC this week, I really think that all right, so we basically been held inside this range right here ever since we had this strong push up right here. All right, and another thing to note is that if you throw a horizontal line right here on this $94.50 level, 94.500 even. All right, so the high of this candle right here is 94.503. All right, so that is significant to me. All right, so if we come over here, you see this last up candle here, that's basically what we're reacting off of right here. And ever since that day, we basically been held inside this range right here. So that's been 11 days. And in my honest opinion, I think that today through Wednesday, we're going to stay inside of this range right here. So our range will be here. Our range will be from this high to this low right here. This is our current dealing range. And I believe that up until Wednesday, we're going to stay inside this range. And at that point, FOMC will drive price to run out liquidity. And the next draw on liquidity, like I said, is basically previous month's high and previous week's high. All right, so maybe something like this. One thing that's interesting to me is this last down candle here. And how price traded right down into the mean threshold of that candle. Very interesting to me. And I feel as if this is a solid swing low. Feel like this is a solid swing low. A higher low. So as you can see, we're stepping up. We made a higher low here. Okay, let me switch it to a line chart. So notice how we make a swing low, another swing low. And before we trade up, taking out these highs right here, we run liquidity that is resting up under here. As soon as we run this low out, that's when we trade up, taking out all this liquidity here. All right, so we make another higher low here. And before we push up, taking out this high, what happens? We trade down, taking out this short-term low, just like we did here. Right there and right there. And as soon as we run out that short-term low, we push up. All right. So if we were to continue that, if we were to continue this, pattern right here, that means this low right here would have to be taken out. So it is possible that, we trade down, taking out that low before running out this liquidity here. And it's hard to say, when that's going to happen. We just got to kind of play it by ear. We have been pushing up for the last month. For the last month, we've been pushing up, and we ran liquidity. We ran this liquidity here, And I'm really expecting some type of pullback right now. Honestly, I'm expecting a pullback. I do want to see this liquidity get ran out, but I'm not too convinced that we're gonna run that liquidity before pushing down, because like I said, we got this strong push up right here, and then we basically start ranging, staying inside this range. And you know, last time we did that, we traded down for about 2 weeks. I do feel like we're kind of shifting back down to the sell side of the of the range. We're taking out some pretty significant lows right now. I always say this, man. I always say that I don't really like doing my weekly watch list on Sunday because we don't have no data to go off of. And I'm a real big fan of the weekly perspective and trading the weekly candle. Basically, that's why I have these time-based indicators on here, because I understand that certain days of the week gives me certain signatures and price. Like, you got to understand that Sunday and Monday is typically the accumulation and manipulation phase of the weekly candle. So basically, the weekly bar, the weekly bar. Let me fix this. All right, boom. So the weekly bar. All right, so just say, for example, I feel like this is gonna be a down week. All right, so let's look at a down candle. It looks like this. You have the opening, and then you have the high. Just look at this candle right here as I'm drawing this other one, this one. All right, we got the opening, we got the high, and this part of the weekly candle always happens on Sunday and Monday. So by Tuesday and Wednesday, we are now entering into this part, the weekly expansion. So basically, if we are anticipating lower prices, you want to try to be a seller at or above the opening price. So Sundays are very important to, determining your open price. So the open price here is gonna be 104, 94.104 right there. So we can come over here and say, okay, price. All right, so with that being said, what are we looking at now? Looks like we're working our way down, don't it? So right here, we get a major run up right into that 94.500 level. and then a strong push down. All right. So right as of here, we're in last week's price, last week's trading range. We open, we trade down, creating the low of the week on Monday. And then Tuesday, we consolidate, Asian session, boom, we push up. And this is basically a retracement from here. So we trade up into this last up candle. Then we push down. I don't like that we did not make a lower low here. So that's not really convincing me. But we did kind of develop some type of bearish structure right here. I mean, I really kind of want to remain bullish on this. It's kind of too early to tell, to be honest. But I am going to pay attention to this area in price right here. And I'm going to pay attention to that area right there. All right, so basically, if we push up into this level, I'm going to be anticipating some type of reaction. All right, so this is the whole 4-hour candle right here. All right, that's an interesting spot. Let's look at the 50% of the 4-hour candle. Let's see what we can get out of that. All right, let's move over to Euro USD. Right here on NFP, we caught a beautiful, beautiful trade here. Bought in right here and took profit right here. So we was looking to buy this thing based on the retracement that we got down into the 50% level right at New York Open. All right. And then like technically we have another swing low right here. And that's really, really, this is the area that I was buying off of right here. But I placed my order right there and took profit at the high. All right, so getting into our predictions for this week. Let me start at the monthly. Let me take my trade executions off. All right, so this kind of supports my theory of the DXY starting to go down. All right, so I do not think that we're going to go any lower anytime soon, because right here is previous month's low. We just traded down and took that out. Now, switch back over to the bar. So we open, traded up. I don't know, guys. I do think this is gonna be a up week, a up close week on Euro USD. I would be interested into trading up above previous week's high right there. We got buy side liquidity resting above there. I'm just not too convinced of price trading down any further at this point. I feel like this was a significant low right here. I feel like that was a significant low right there. And now we're starting to basically, trade up. This is an area of interest for me up here. So like if we can trade up and take out this liquidity, that would be a good reason to go short from up here. All right, so at this point, I want to see if we can get a reaction down here. We have liquidity right here. We got equal lows right there. So if we can get a push down to this level, I would definitely try to go long from there. So basically what I'm saying is if we could get a push down leading into Monday night, Tuesday night, I would definitely try to go long from there. But let me say this. If we start trading up and create a high, all right, so basically, if we start trading up and create a high on Monday or Tuesday night or so, I would be looking to take this thing down. All right. I don't want it to seem like, I'm trying to pick both sides of the market, because I'm not that type. Like, I like to give straightforward analysis. Um but like I said, man, the type of conditions that we're trading in right now, I feel like it's kind of like a higher time frame reversal. All right, so we just traded down, made a sharp move down, running out liquidity. All right, which leads me to believe that we could start going up from this point. Now we are in a bearish environment for sure. This right here is a reversal, a higher time frame reversal. All right, if you look at the weekly, we came up into a weekly order block, which is located here. All right, so we traded up into here, a sharp move up, a retest, and we just broke structure to the downside. So now I'm looking for, I am definitely looking for a run up, like a retest. Okay, we got relative equal highs up here, imbalance. I'm not too sure that we could possibly make it back up here. So into this level right here, and then take us back down as far as the long term um point of view. So here, but I'm not a long-term trader. I basically look for intraday setups, and that's why I'm telling you. All right, so if we start trading down the first couple of days of the week, then I would be looking to go long during the middle of the week. If we start trading up during the first couple of days of the week, then I'll be looking to take this thing down during Tuesday night, Wednesday, New York session, Thursday, New York session. GBP USD, I really see a nice play on this. All right. I really see a nice play on GBP USD right here on the 4 hour. All right. So we have clear liquidity. All right. So it's kind of sketchy on DXY and Euro USD. But right here, we have clear buy side liquidity, relative equal highs right here. All right. So right above that, we have this 4 hour order block. All right. So this 1.3700 level is what I'm interested in. And below that, I'm basically gonna be looking for this 80 level, 1.3680 level. And the 1.36700, 1.3700 level. I'm sorry. So let me fix this. All right, so we drop down to a 1 hour, and you see what it's giving us, right? So we got this 1 hour order block right here. So I guess, I want to keep it at that 700 level. I really want to keep it at 700 level. I like that level right there. But for entry, like to make sure you get in the trade, I would definitely probably I don't want to discount this 1.36800 level is what I'm looking at. I want to see what it looks like. All right, so that's basically like trading up into this daily order block right here. All right, so I'm just gonna make this another color. And see, this is the only thing that's kind of got me worried about this. And it could indicate like, all right, so we traded up. All right, we created relative equal, all this liquidity right here above all these daily highs. Boom, we traded up on NFP and took out all that liquidity, trading right up into this daily order block. Now that makes me believe that we could automatically trade down from here. All right. I really believe that. So we just gotta kind of play it by ear, like I said. Here we push straight up into that daily order block, the wick of the daily order block. But this would be kind of like, 50% of the daily order block. So if we could get up in there, that would be sweet. Um, all right, look at this. Like this looks pretty decent in my opinion. Like we got an order block up here that has not been mitigated, if you will. And we got like this is just for like a lower time setup. Like look at this. Look at this sell side liquidity here, there. Like we got a lot of targets to the downside, period. We got relative equal highs up here. Like I like this setup, man. If we could get back up here, oh, that kind of changes things up a little bit, don't it? Like you can't never discredit the 15-minute order block for real. Like look at the difference. That's 7 pips. I'm gonna set an alert right here because I really like this. I really like this area here. This whole area. I'm gonna like I'm not setting a sell limit right there. So don't think that um being that it's only Sunday, and if we start trading up, we could possibly trade up, creating the high of the week Monday night or Tuesday night. Okay. Now, will this react from here and go lower? It's a possibility. It's definitely a possibility. All right. But I don't want to get caught up because it very well could come up into these levels right here and then go. All right. Like I said, right here. This is why I should just start doing my weekly watch lists on Tuesday. I could have some like definite setups around Tuesday. Like look for example right here, and you can see what I'm speaking on, man. Like this is a trade that I caught right here. Okay. So I always look for the high or low of the week to form on Tuesdays. So right when this happened, you see these equal highs right here. All right, so I was anticipating price to trade up, taking out them equal highs and then going lower. So what I did was, as soon as price took out them equal highs, I immediately entered a sell. All right. And I held it until it took out these lows right here. All right, that's 60 pips right there. Boom, I closed 75% of my position, and then I held it until New York, London closed right here. That's when I closed the rest of my position and realized that we was forming a buy setup for New York Open because price traded down, creating the low of the day during London and retest during New York. All right. So that's kind of like a basis of what I'm talking about here is that, again, you remember the weekly candle I was speaking on? So how we open and then we trade up. All right, so this part of the weekly bar, this is going to be our weekly bar. So this is always Sunday, Monday, and Tuesday. And then after Tuesday, you want to anticipate this part of the weekly bar. And then Thursday and Friday, you're going to start trading up and then closing. But this was just a mixed week. You know what I'm saying? We didn't really get that right here. We got it right here, though. So we can take this and move it right here. And this is what our weekly bar will look like, or a weekly candle. You know, a weekly candle like that. It's better to look at the bar though, because you got the open, the high, the low, and the close. We'll go back to the daily time frame real quick. And it looks like a good setup for a continuation down. It really does. Cause like, all right, so here we have our swing high. We have a low set in place. And as soon as price comes up into our kill zone right here, look, it has not passed this 70% retracement level. It did on NFP, it traded right up into it, and then we got to push down. Like we just been held in this consolidation because we are within this kill zone. I am definitely looking to take this thing down, bro. This thing is about to drop, man. And keep in mind that this week is FOMC. And if you go back and look at the history of FOMC, they like to hold price in a range. They will consolidate it Sunday, Monday, and Tuesday, and then Wednesday afternoon during FOMC. That's when your volatility will come into the marketplace. All right. All right, bro. Do you have any pairs you want me to look at? You can type it in the chat or you can unmute yourself and tell me. Like I could go over any pair that you want me to. Just let me know. Check USD JPY. All right. Look, this setup right here, I think US 30 is setting up nicely for a sell-off. All right. I don't know if you trade that pair or not, but I really think that it's setting up nicely for a sell-off. All right, so we got this trade up and a strong push down, engulfing candle, and we just pushed up and touched the opening of that monthly order block, like perfect. So the opening of this candle is 3, 4. Let me just do this. All right. 34995.7. All right, and then I'm gonna take the high of this candle, 34,990.6, and this is 34,099.5. All right, so this is 34,099.0, and this is 34,099.5. So like that's significant in my eyes. It's very significant in my opinion. And we just created a swing high, a high with two lows on the other side. I think we're going straight down from here. I honestly think we're going straight down from here. All right, looking at it from an intraday level. All right, we got sell side liquidity right here. We got equal lows there. I wonder if we could come up here and take out this liquidity, basically looking like this. Take that out and then go down, coming up into this order block right here. That would be beautiful. That would be perfect. Now this setup, like that was nice. I wish I could have caught that. That was nice right there. That was beautiful. If I would have seen that, I definitely would have caught that. That just happened as soon as the market opened. Boom. 1,300 pips. That was nice. So, I mean, wait until price gets right here. I bet you we get the same reaction. And we just created relative equal lows all the way across the board right there. I like that. All right, USD JPY. Got that right here. All right, let's just do a full top down. All right, on the monthly, we're actually coming up into a area of interest. It's 64 pips away. That's not far. All right. And you got buy side liquidity there. Above this high. All right, so basically this whole area, like the low in the opening of the monthly order block, that would be my area of interest. All right, drop down to a weekly. We got a weekly order block right there in that same area, okay? So let's mark that up too. black. All right, so it looks like we're opening this weekly candle up and immediately taking out previous week's high. All right, so that could be significant. That could be significant. I think I like this one. So somewhere up in here, basically where that the monthly was. I want to keep it right there, that monthly. And it's only 60 pips away, so all right, so we do got an order block right here. It's a 4-hour order block. And it looks like price is coming up into that level right now. We're definitely up into a area of interest to where we could be looking for sales. I mean, I know this thing has been bullish, but honestly, I think this thing is gonna drop just like the dollar. So being that it's coming up into a higher time frame area of interest, like this order block here, look at the effects that this order block has had on price. All right, so from this point, we traded down, right? We created relative equal lows here. All right, we came right up into this order block here and immediately traded down, taking out them equal lows. All right, we traded right back up into that same area, the low of this order block here, and had a huge drop. I'm talking about that was a big drop. We came right back up, and now we're in this same area again. All right, and we got a lot of liquidity up under here. We just had price push up for three weeks straight. Price it's overbought and it's about to get relieved by pushing down. I promise you that. It's coming back down from here. I mean, you do have liquidity resting above here, these relative equal highs right here, but I don't think price is going to get back above here. I just don't see that happening, man. I don't see it happening at all. So my honest opinion, bro, I would be looking for a down close week. So this is the weekly candle. I would be looking for a down close week. All right. I'm not convinced that we're going to trade higher this week. I would be looking for price to trade lower. pushed up, pushed up. We just cleared liquidity right there with a strong push up. And right after liquidity is purged, also coming up into an area of interest. Look how close price got to that old 4-hour order block just now. 2 pips. It came up 2 pips. It very well could come back up there. I would be looking for lower prices at this point. I mean, even from like this point right now, I feel like price is about to start dropping. But don't ever try to trade on a Sunday, man. I don't even ever trade on Mondays unless I see a real solid setup. All right. All right. So I guess we can look at gold real quick. And then I'm gonna end this. All right. So let me clear the board. All right, so it looks like price has been held in a range for quite some time. I mean, this is a monthly chart, man. So like 334 days, that's almost a fucking year, you know? Like it's just been in this range, but this is something that I've been looking at for quite some time. These relative equal lows right here, sell side liquidity. Gold has been paying off beautifully for me. Like gold is probably one of the reasons I'm at where I'm at today. I love trading gold. I mean, we definitely got some clear targets to the downside. Did you know you can use gold to basically help you determine where the DXY is going to go? Yeah. Wow. All right. So basically, what you're seeing, pay close attention to what I'm telling you, because this is like mentorship level shit. All right. All right, so probably a little more like this. Let's see. We got a high, then higher high. We got a high and then basically equal highs. So that's like a clear cracking correlation right there. All right. So from this point, We got a strong push up on gold. So basically, how gold can help you. I usually use gold, the gold contract, um, not not XAU versus USD. That being said, because gold versus the US dollar is heavily confluenced by the dollar. So I need to change this basically to gold futures. All right. All right, right here. All right, so this is going to help us out better. So how you use the gold continuous current contract to help determine where the DXY is going to go. All right. So we're going to move a lot faster on gold opposed to the dollar. All right. So basically, after you make a swing high in gold and you're looking for lower prices, you can anticipate the next 1 to 3 days after this happens for the dollar to do the same thing. All right, so basically what you're seeing here is, all right, we got relative equal highs here on the dollar, and we got relative equal lows here on gold. All right, so we trade down, pull back, and you anticipate a price to trade down, taking out these equal lows. All right, so the same can be said here. You got equal highs. You got price trading up, pulls back, and eventually takes out them equal highs. Now it's up to you to get in here and, to try to link, the confluence and how they correlate. All right, so for example, right here, we got a strong push down, and then price starts pushing up. The dollar is going to follow behind that every time. It usually takes 1 to 3 days before the dollar catches up with gold. So right here, we get a strong push down, and as that is happening, like gold or the dollar doesn't do it until a day after that. So this strong push down, and then the very next day, we get a strong push up on the dollar before turning around trading lower. And you see how right here we got gap in price right here on March 21st. I mean March 30th. Well, we didn't get that gap in the DXY until April 5th. So like 4 or 5 days later, we got that gap. So that's how you use the gold contract, the futures contract, to help you predict what the dollar is going to do in the future. I know it sounds kind of confusing. You just got to get in here and really study it. Study the price action behind it. All right, man. You got anything else you want me to look at before I go? All right, man. I'm out, y'all. Peace out.